Bitcoin is not blockchain, and blockchain is by no means Bitcoin. Blockchain is just simply one aspect of, one of the core technologies that powers Bitcoin, or Bitcoin is underpinned by.
From Peckham, Southeast London, this is the Genesis Block Education Podcast, and I am Bitcoin by Malks. Welcome. Guys, episode 7. Thank you for joining us. And obviously, before I start with the content, I'd just like to say thank you to you, the listener, downloading these podcasts, who's listening to it, who's sharing it, who's liking, who's commenting. Thank you. Thank you for your time. Thank you for your appreciation. Thank you for your engagement. We know this Bitcoin, blockchain, crypto industry is so niche at the moment. So I like to believe the people who are downloading and listening to this podcast are people who actually have an interest in this industry. And it's going to explode, especially next year. So I'm only here to help you, educate you, and get you on that journey, because next year it's going to be really, really interesting. So we're coming to the end of series 1. I've got one more podcast in the chamber. Let that go at Christmas time for you guys. And then we're looking at the horizon for 2021. So it's going to be an interesting year. So how we'll shape up for that. All right, on to today's podcast. Now, the title of today's podcast is Blockchain Hype? And the inspiration behind this is going back to 2017. Obviously, we had Bitcoin hit the all-time high, which it's done, which we've come in close distance or even past sort of in recent months. So 2017, Bitcoin hit the all-time high. There were so many new cryptos being created every week in 2017. So many pump and dump, so many scams, so much going on, so much life at that point in time in 2017. And one of the phenomena was the emergence of blockchain technology as a thing. I mean, we even had companies such as Kodak, long-established companies, which were adding blockchain to their sort of strategy, and some companies even adding blockchain to their name. Their prices, share prices, skyrocketed just because of blockchain. Since then, the noise has gone away from blockchain a bit, and I think now we're left in a period where organizations who are still in this space are really still working with the technology to build tangible solutions on our technology, which has promised so much but delivers so little in the short term. So in today's session, myself and James, we basically power through blockchain as a technology. We touch upon what are the key principles of blockchain, what is the real value behind blockchain. We also talk about the adoption of blockchain technology, where blockchain has pretty much been corrupted by industries now, I would say. And with Bitcoin being the only tangible evidence of a killer app on blockchain. Could there be more down the line? Potentially. So James and I literally sting like a butterfly and float like a bee through all these topics. We cover so much in this. Talk about sort of blockchain on a macro perspective, how governments are looking at it, the challenges facing blockchain and mass adoption. But there's also a really good part where James and I talk about Bitcoin versus gold. We can't leave Bitcoin out of the conversation where blockchain is concerned, because obviously Bitcoin is underpinned by blockchain. So my guest today is James McKay. I've mentioned his name enough. James McKay of McKay Research. James is a market consultant who focuses on sort of global trend analysis, especially in tech investments. He works with a variation of customers such as investment firms, legal consultancies, and consortiums. James really takes you on a journey here in terms of what's happening from a corporate perspective, from wealth management, regulatory challenges, regulatory overview, and then back to giving a view of real life solutions which are being developed on blockchain. So guys, this is going to be a really interesting conversation. It's information packed, and James is a charming and intelligent guy, so you're really going to appreciate his knowledge and insight. So guys, enjoy the podcast, I'll see you on the other side, and it's over to you, James. James, Mr. McKay, welcome. Welcome to the Genesis Block Education Podcast. How's your day? What's going on?
Malcolm, great to be with you finally. I know this has been a long time in coming. Yeah, finally we made it happen. But, exactly. Good things come to those who wait. So let's hope make it a good one for everybody. My day is cool. I had a good week, very, very busy. I had a product launch for my business, all sorts of shenanigans going on with other things in terms of relocation right now. And it's Friday and here I am still at the office.
Oh, mate!
About to do a podcast, and maybe this is the new normal for me as well.
So, just briefly, lockdown 2.0. How's it treating you?
You know what? Not too bad. I try not to complain too much about it.
Yeah.
Particularly now that the weather is not as good. Though I'm not, I have to be honest. I haven't really been confined to my bedroom or a living room or whatnot. I have been going to a sort of a socially distanced workspace. It's still kind of kept its doors open. Okay. And I've really just been using the opportunity to have distraction-free long work days and focusing on all the things going on in the blockchain and Bitcoin space as well, obviously, and as well as all the other things I'm involved with my clients, so on and so forth. So it's been busy. The kids obviously are still at school. Nice. So they haven't sort of been beating my door down like they did for a few weeks in summer there. So it's been okay. But I know that the two of us have had conversations in the past, of course, about what we think is actually going on here. And obviously we won't go into that. That's not the topic of conversation. But I really do think that they're going to have to. The government is going to have to find some sort of way to not be as rigid and as dogmatic in their prescribed with their rule making. And I have seen a few things about cases dropping, so who knows, maybe things will open up again sooner than we think.
Well, fingers crossed before we approach Christmas. So today we're here to answer the question, is blockchain hype? And obviously I have yourself, Mr. James McKay, on behalf of McKay Research. So James, tell us about McKay Research and tell us about yourself, of course.
Okay, well, I'll keep this one brief. It's basically I'm an independent research consultant, and my expertise is really global trend analysis and end-to-end custom research solutions. And I've really spent a significant time, over 12 years now, performing in-depth qualitative and quantitative studies for some of the world's largest privately held research companies. And that's really been across several industries as well, including fast-moving consumer goods, consumer finance, pharmaceuticals, and I've also spent some time as a portfolio analyst here in London. Okay. So I've been quite fortunate in that I've had the opportunity to have performed like a lot of deep dive analysis for all these industries, and a large part of that, of course, was doing a lot of in-depth interviews with industry experts, chief executives, etc. And I sort of quickly learned through that I sort of started seeing patterns in the data and trends both within and between different markets. And I developed my own sort of 360 methodology around that.
Oh, nice.
Which I obviously took very seriously, as my clients would be paying, for me not to miss things. And so from that, really, I learned that there was a demand for consultants who can, not only run the numbers in new and interesting ways, but can also give, perspectives informed by a plurality of market experience, as opposed to, single domain thinking. And that's kind of the issue now with the increase in data and big data.
Yeah,
a lot of the specialisms are becoming very data heavy, and indeed, a lot of people are having increasing issues stepping outside of that. So there is a demand for people who can actually see and connect things in different ways. So that was really the driving force behind setting up McKay Research, where I now bring this sort of unsiloed view, I like to call it, to my portfolio of clients that include investment firms, market intel firms, legal consultancies. And so, but the focus is very much on tech and investment for me.
Okay. So what's attracted you to, I guess, the blockchain space?
Well, that's the $1 million question, really. It is the way, from my vantage point, as somebody who's looked at trends, social trends, political, economic trends, as well as obviously the multiple consumer markets and investment markets that I've tracked over the years. I kind of, without getting too philosophical, I sort of see Bitcoin as a potential once in a lifetime intersection or like interlocking of multiple trends all at the same time, of in technology, in finance, in politics. And yes, it does have some real potential to correct some of the structural issues and imbalances that we're seeing play out in front of our eyes pretty much every day now. And I first really got heard of the space through basically my coverage and my studying of capital markets, like the gold market and the bond market.
Right.
Typically, my background in financial markets really was very gold heavy, because I realized from quite early on that if you understand how gold works, it forces you to understand how everything around it works. Including the stock market, the debt market or the bond market, monetary systems, monetary policy, and so on and so forth. So I really first became familiarized with Bitcoin through studying gold, and of course having listened to a lot of the gold guys over the years and knowing what their positions are. Not that I agree with all of them, far from it. I became aware of this thing called Bitcoin, that in the early days was really seen as just maybe something that, I don't think many people took it seriously. They thought it was just, a form of internet money that a bunch of like IT,
geeks,
bedroom bound, IT sort of geeks were interested in, like trading amongst themselves.
Yeah.
But it soon became that, actually this thing wasn't going to go away, and, there was a reason for it. And from there, I started to investigate the technology a little bit more closely, and it did very much tally with a lot of my understanding from what's my analysis of the global financial crisis in 2007, 2008, and why the people who were touting Bitcoin actually might be onto something. And so really, all my involvement in the industry really stemmed from that vantage point, really one that was very much sort of a macroeconomic and even political platform. And and here we are today. Of course, it's worlds apart from when I first started following it.
Oh yeah,
but,
exactly.
It's very
Snowball.
applicable to almost every area that I've covered in the past. So it's very, very exciting space.
100%. So we'll talk about the cross section between Bitcoin and gold in a second, but I just want to kind of go to the basics of blockchain. So what is blockchain? I know this is such a vast question. So if you can narrow it down in the best way that you can, in your view, what is blockchain? How do you see it from a layman's perspective?
Well, what I would say is that the more you know about this industry and the technology, the more you realize you don't know.
Yeah.
And I did, and as soon as you think you've kind of nailed it, it's like I've understood the general concepts. Then you realize, oh my gosh, there's a whole nother layer of complexity, layers of protocols or whatever else that you haven't quite got to grips with and haven't grasped yet. So, but the way I like to break it down, as you asked the question, what is blockchain, is that I definitely do see them as distinct. Bitcoin is not blockchain, and blockchain is by no means Bitcoin.
Okay.
And for me, the easiest way to think about it is that blockchain is just simply one aspect of, one of the core technologies that powers Bitcoin, or Bitcoin is underpinned by.
Okay. And
so that's the first thing. The second thing I would say is that where I draw a distinction in my mind between Bitcoin and blockchain is that I think that Bitcoin, especially now in the current climate we're in now, it's getting a lot of press and attention from financial markets. I mean, not quite as much as it did a few years back, but it's going to be increasing. The trend is up, and so I do see. I sort of divide in my divvy up in my head the interest in the sector between people who are looking at it as a sort of a financial asset akin to gold,
Yeah.
and just really see it as a speculation and a way to make as much, profit or investment alphas in as short a time as possible.
Yeah.
Given that the other financial markets are sort of in a relatively precarious state at the moment, and on the other hand, you've got the people who are really understand the technology and are in it for the long haul and really see it as see its value as in its ability to facilitate sort of peer-to-peer exchange of value across a decentralized network of participants. So that's sort of the the original intent and purpose of it. So there's a big difference between those two. I mean, if you're going to add a third, of course, then you would have to probably add the business community into that, which is some would say co-opted the technology, which I don't quite agree with.
Yeah.
But there is obviously huge utility behind blockchain technology for there's increasing numbers of business use cases being developed as we speak. Thankfully, a lot of the hype has died out, which we can talk about a little bit more later.
So, yeah.
But I would say, to answer your question, what is blockchain? The first thing I do is I sort of make those distinctions in my head.
Okay.
And that it's really become something that means many things to many people.
Many people, yeah. I guess, sense. It totally depends what lens you're looking at it from. But I think we can lay out what the principles are or the benefits of blockchain. So what do you see as the main benefits and principles within blockchain?
Yeah, so I mean, to answer your question directly, I mean, for me, blockchain, I think of it as an immutable time-stamped series of data that is distributed across the network and managed by a cluster of computers instead of one central authority.
Right.
So obviously, all the nodes can verify the transactions, so that you have that ability to distribute trust across the network instead of having one gatekeeper that authorizes all those transactions. And so there, because all the parties in a network, which is, they can be a group of people, a group of individuals, businesses, or even, whole groups of chains of businesses, it obviously reduces the amount of friction that goes on in transactions, because you don't have all the authorization and reconciliation mechanisms.
So the middlemen in between. Yeah,
exactly. So that whole disintermediation is one of the core business use cases for blockchain, but also one of the core use cases is for Bitcoin, because Bitcoin, if we think about what its original purpose was, in many people's eyes, was just a transfer of value or a money transfer problem. So you wanted to have the ability to do transactions without a third party, which obviously is a way to make it more efficient and reduce costs, and you want to be able to do that faster than you did before. And now if you still try and carry out a banking transaction, which I tried to do the other day, stupidly enough, the charges now, I mean, looking at seeing it from sort of the lens of someone who knows about how these other digital currencies work, the banking fees that get slapped onto international transactions are huge, and they also take over half a week to execute.
Up to 3 days in some countries. Exactly. I totally agree. I see it as the next level or next generation of the internet. So the current, I guess, internet that we currently have is when you transfer anything on the internet, it's a digital copy, whether it's a PDF, whether it's an email, whether it's a PowerPoint or data, it's a digital copy. Whereas with blockchain, it introduces the ability to transfer digital scarcity. So it could be something such as money, a deed, but you're transferring something which is unique. So I think it has the potential to take the internet to a next level, and in some cases it's referred to as Internet 3.0. But that may be hype rather than reality. So I guess we'll discuss that a little bit further. So
I agree.
Just in terms of social impact, what do you see as the key benefits? So I understand it from a technical perspective. What impact can it potentially have on society?
Okay, well, again, there I would probably start out by referencing what I said about the different layers and the different
Yeah,
interests,
of course.
and the different ways
Yeah.
you can look at this technology. I think that a great way to look at it is that for the people who say that it doesn't have that much utility in the real world,
Yeah.
it's just a digital currency. It's intrinsic value of zero, whatever, so on and so forth. There's another important perspective, I think, that just goes beyond what money managers or hedge fund managers think about whenever Bitcoin will rise to six figures and whatnot. And I think that that's probably one thing that's it's sort of neglected a little bit more than it should be, and that is that Bitcoin has been directly employed for emergencies by like a lot of people around the world.
Mm.
And I think we would all agree that, like, if you see large groups of people resorting to something that in an emergency, and that thing that they're resorting to actually works to solve a lot of their problems that they have in the immediate term, that is a pretty good litmus test of its utility and its functionality, basically. And so, if you look at places where it's being used in such a way, like great examples, Venezuela, where people's
100%,
purchasing
yeah.
power has been decimated to the point of being worthless, and so people are turning to Bitcoin as a means of shoring up whatever purchasing power they might have still, because the government has totally destroyed the currency and introduced capital controls.
Yeah.
So these individuals are basically making raw and direct use of what Bitcoin was really originally conceived for, and so I think that's a really, really important point that people need to really take on board. Those who are still on the fence about whether it has any value or not. To give another example, for example, is that I like to quote as Iran. I just posted about this today on social media,
Yeah.
and how that is, they announced, like, it's a couple of weeks ago now, but they made another announcement today about how they're already, moving quite heavily into Bitcoin in order to circumnavigate the sanctions, which obviously, for a long time now have cut them out of the SWIFT international banking system, out of necessity, because the real has been basically plummeting, and they've got skyrocketing COVID-19 cases. And there are all sorts of structural imbalances that are happening in the country as a result of not being able to transact. They've basically just said, okay, well, we have to find another way. Yes, we've negotiated trade agreements with European countries like Switzerland, special trading mechanisms that they've used, but it's not enough. And so they've looked to Bitcoin as a potential solution there, against centralized control of money flows. So that's another example. Whether you agree with the Iranian regime's intentions or not for what they're transacting in and out of, that's probably a subject for another debate. But I just think that the fact
I've got
that they're
my
using
views.
it exactly, the fact that they're using it and using it successfully has to be it has to be a bit of a it's a bit of a sounding board for the entire region, I think, and it will spark fear in the hearts of those that are attempting to maintain sort of US dollar hegemony. From a pure Bitcoin point of view, there I think we can see that in cases of, say, institutional, government, or even individual distress, it already has the track record, actually, it has proven utility, and it's happening right now. So I think that is one area that's slightly overlooked, as people can often get embroiled in these armchair debates about whether it has value and what its investment delta will be over the next decade, and so on and so forth. I think it's important to step out of one's comfort zone and one's bubble and look at where it's being deployed directly to sort of alleviate suffering, basically.
Yeah, no, just to add to what you said, I mean, in 2020 alone, we've seen it used on the front line of the NSAS protest in Nigeria. We've seen it used in Argentina, where Argentina has, capital has been constantly frozen over years as part of the Corralita. We've seen it in Belarus, which is currently going through its own turmoil. We're seeing it cases just literally escalate all over the globe. So it's something to really keep our eye on as it gets the case for Bitcoin as a tool for protest, as well as to resolve emergencies. It just gets bigger and bigger.
Exactly, and another you meant those are really good examples. You mentioned another one is Cyprus. I read recently there's been a big uptick in Bitcoin activity coming out of there now,
Right.
and it was only
Turkey
less than
as well.
5 years ago. Yeah, Turkey as well. So I mean,
Yeah.
basically, it's hard not to
Yeah.
find a place where the involvement isn't increasing. And I think this goes back to this idea that it isn't a coincidence that Bitcoin emerged in the wake of the financial crisis.
Yeah.
And I think the
Yeah.
more people learn about it and the deeper you go, which perhaps we can get into a little bit more, and its relationship with gold perhaps in a second. But it was really almost designed like as a political statement in that sense, to enable the individual to take ownership or control over their own financial futures. And I think that is basically hardwired into the DNA of Bitcoin's protocols, and so
100%.
and it always reminds me of that quote from, I think, one of the Rothschilds that said, "Give me control of a nation's money, and I care not who makes the laws."
It's so true. It's so true.
In every situation where you see Bitcoin being deployed effectively, it all comes back to a case of monetary imbalance, or inflation, or capital controls, or whatever else. So I think that for a pure demonstration of Bitcoin use, I think the examples that we've decided there are they're basically stacking up day by day, multiplying.
Yeah. So I just want us to turn our lens a little bit and just kind of look at sort of Bitcoin and the macro picture. So we've already referenced gold already, but just in terms of to just stimulate the conversation, we're seeing so much happen in the macro space. I mean, the world's literally on fire at the moment. We have the Federal Reserve, central banks all over the world expanding their balance sheets through quantitative easing and the printing of money. The money printers is going brrr, wherever that meme is. Even the US Federal Reserve has just announced they will be doubling the rate of inflation over the next few years. So add on top of that, COVID, currency devaluation, stimulus packages, and trade wars. Yeah, we're just in a time of monetary expansion, and historically, gold has been that go-to asset to hedge against monetary expansion by governments. In the recent years, Bitcoin has been baptized as Gold 2.0 and digital gold. So I just want to explore the kind of differences, the cross-section between gold and Bitcoin.
Well, that's a great question. And again, I mean, we could speak 24 hours on that topic alone.
Yeah.
I think that a good starting point really is to look at gold's history and why we're seeing certain dynamics play out right now in the markets with respect to gold, with respect to other capital markets, and with respect to Bitcoin now entering that picture as a real entity and competitor to the old established order of stocks and bonds. So I mean, if we think about what gives money value, I mean, as the global reserve currency, the dollar actually isn't tied to anything of value right now, no asset whatsoever.
Yeah.
But this, I think, for a lot of people who don't really know a lot about the history, a lot about monetary history, it's not actually that long ago since gold was pegged to gold. I mean, it was it was only struck off the gold standard.
1971, I think it was.
Exactly, 1971.
Yeah,
Richard precisely,
Nixon.
Yeah. So, and so in those days, up until that point, 1 ounce of gold was redeemable basically at a fixed value of I think it was $35.
Yeah.
And here you get into the debate of Austrian economics versus Keynesianism and everything else. However, of course, to expand the monetary supply, some say it was just purely for political ends, for political goals, they had to remove it, as you say, in 1971. So, so that was the point at which the gold, the US dollar, excuse me, became essentially a floating currency, or like a fiat currency.
So to interrupt, did you know that the pound sterling was previously pegged to a pound of sterling, so you could actually exchange a pound sterling for a pound of sterling? I found that out yesterday, literally.
Yeah, because
I did not know that.
I studied the history of precious metals for years.
I found that out yesterday, that you could actually go and exchange a pound sterling note for a pound of sterling. Sorry, I just had to share that.
No, absolutely.
I did not know that.
That's actually given me a real boost that that we have that that common knowledge now, because I mean a lot of people don't know that. I guess some of the youngsters around today will probably think that it's named after a football player, but it really is. All the old coins used to be minted. They used to be sterling silver, which I think is 92.5% silver.
Yeah.
And even if you go around antique markets, or not even necessarily antiques, even things that are produced today, decorative items, things on the mantelpiece, or candlestick holders, a lot of them are sterling silver, so they actually have real value. And back in the day, when it was all about shillings and sixpence, that it was, all the coins were, as you say, sterling silver. And it was exactly the same in the US with gold up until 1971. And the point is really, since then, the dollar's value has declined immeasurably. I think over 95%, like 97% or more. And also in that same time, gold has gone from $35 an ounce to what it is today, between $1,800 and $1,900 an ounce. So, I mean, that's one of the reasons why gold obviously is seen against a hedge against inflation, and has largely been shunned by the financial mainstream, because it's seen as something that is essentially a lump of rock that's, I think, famously Warren Buffett said, it's dug out of the ground, out of a hole in the ground in one place in the world, refined, and then stuck in another hole in the ground in the form of a vault.
He's changed his tune on gold recently, though, hasn't he?
Yeah, well, he has. Yeah, he's been forced to.
Dropping his banking stocks. Yeah.
Exactly. It doesn't, obviously doesn't provide any yield like bonds typically do. And as a result, it's the most negatively correlated asset class to the stock market. And so it's seen as an inflation hedge. But gold is not just that, because if you look at even the recent history of gold, for example, in the 1990s, we had inflation running very high at the end of the 80s and 90s. The gold price didn't actually increase that much; it stayed relatively flat. And likewise, more recently, I think between 2005 and 2011, the gold price went all the way from $400 an ounce, and rocketed up to $1,600-1,700, and that was during a period of relatively stable inflation. Oh, wow. So it isn't always a clean, a crystal clear or clean cut case. And that brings me on to the point that's probably more important, which is that it's also one of its primary qualities is really also a hedge against not just inflation but systemic risk. Mm-hmm. So that means real failures, like a failure of another financial intermediary or network, like a sovereign default, like we've seen in Lebanon recently. These things still happen, and they're probably going to increase in frequency. Like a real disaster scenario, like in the Weimar Republic or in Zimbabwe or Venezuela, when you have hyperinflation. Yeah. Those are the sorts of events where gold really, shoots up in value. It's because it's to protect people against like things, catastrophes. And lo and behold, what have we had in 2020? We've had a major catastrophe that apparently nobody saw coming. It came from left field. I'm not really sure why, because I think you've probably heard that, I think, under Bush and previous administrations here as well, they actually had a significant, Obama as well, exactly. Yeah. They had a significant amount of pandemic
warning
simulation planning.
Yeah.
So I'm not really sure what happened to that. But the point is that these are the sorts of social and economic circumstances in which gold tends to perform very, very, very well. Mm-hmm. And so recently, what's happened is that all of a sudden we've seen Bitcoin enter the fray, and as I said before, it wasn't really taken seriously But as its value increased, I think more and more people with interest to protect have seen that it might be something that has similar qualities to gold. I'm sure you would agree that we've all heard the arguments against Bitcoin that, oh well, it doesn't have any intrinsic value. It is basically not real because it just is an entry on a ledger. So
Yes.
what if it's distributed around millions of nodes around the world? There's still nothing tangible about it. Of course, those same people conveniently overlook the fact that central banks are now just engaging in massive ledger entries, or to engage in massive liquidity pumping to keep their own economies afloat.
100%. Yeah.
But these are all arguments that we've heard. It's not, doesn't have any no value. It's we know that it has very, very low transaction speed. So its use case as as a mass adoption in terms of everyday transactions hasn't really come to fruition because the TPS, the transactions per second, is simply too low, which is why you had things like Bitcoin Cash and the Lightning Network to try and speed things up.
Yeah.
But I think that's all good and well making those criticisms, but on the other hand, people, again, I go back to the point that Nakamoto set up the Bitcoin in the wake of the financial crisis, and not only that, he hardwired into the DNA of Bitcoin's blockchain are protocols that are closely linked and even mimic the supply fundamentals of gold.
Yeah.
So not only is there an inbuilt scarcity in Bitcoin.
Yeah.
So for example, it's 21 million, and we're pretty much in the clear that is the ceiling on total supply.
Yeah.
But it's also a question of it matching gold's, so what they call the stock to flow ratio, which is basically it's the new supply rate over total supply, basically.
Yeah.
And so I looked into the numbers on this, and currently I think it would take approximately 58 years to produce the total above stock of available gold if it were mined at current rates. And interestingly, Bitcoin's annual supply rate, which I think is about 1.7 now, or will be 1.7 after the next halving, it's actually also close to being 58 as well. So just to put that into perspective, that means that as gold's stock to flow ratio is higher than any other metal commodity in the world, it is now, Bitcoin is now on the edge of matching that sort of scarcity ratio. So all these design elements and protocols are actually built into the blockchain, which kind of give it that monetary properties that determine its scarcity and in a way its value. So yes, it does perform well as a store of value. It's not performing very well in terms of everyday transactions.
Yeah.
But in the same way, you'd be hard pressed to go and buy a Big Mac with a lump of gold.
Yeah, exactly.
that doesn't really work too well either. So exactly. So in that sense, the two have definitely a lot more similarities than differences.
Yeah. So I mean, so we know gold is hard money, but Bitcoin is also hard money, but it also has improved characteristics such as portability, divisibility on top of it. Do you ever see a world where Bitcoin eats up some of gold's market share? I've heard the term of Bitcoin being called a gold killer. Just to look at some stats, actually, Bitcoin is roughly 2.5% of gold's market cap, and that's based on a 300 billion market cap. And I think the market cap for gold is currently around 13 trillion.
Yeah, exactly. Yeah.
So, I mean, even a move up to 10% of gold is fantastic for any Bitcoin holder. You see a world where Bitcoin eats up part of gold's market share?
That is an excellent question. And what I would say to that is I don't really see that as something that's going to happen in the distant future. I really see that's something that's happening right now.
Oh, right. Okay.
And there's a lot of data in the financial press and the investment press that's come out that's saying that there are large moves into Bitcoin, particularly looking
From
at
gold
the
bugs?
high net worth segment. I mean, some of these people will be gold bugs simply because what you're looking at here is not necessarily the fact that they're moving in. They're necessarily switching from Bitcoin to from gold to Bitcoin. This is the fact that the reason cited a lot of the times for investing in Bitcoin is that it obviously it clearly has significant appreciation value. But also people are this narrative of digital gold is it's stuck. I always laugh about all those pictures that I see in the Financial Times or other news outlets where they always depict Bitcoin as a gold coin, which obviously it couldn't be further from that. Which I always find that quite ironic that they choose the one image that it couldn't be further from that, but that's always the image that you see in the mainstream press, in all press for that matter. But the evidence suggests that it's already happening. So, for example, a survey that was released by a big investment house, I think 2019, showed that over 67% of high net worth individuals see themselves moving into Bitcoin in the next 2 to 3 years. It doesn't necessarily state that will be, at gold's expense necessarily.
Yeah.
But the moves are there. The surveys have said that over half of millennials now feel much more comfortable, or at least more educated, with cryptocurrencies in general and Bitcoin in particular, insofar as investment goes over
that's
gold.
Some huge data on stats. No, that's really
exactly
your trends to call out there.
Yeah, and so I think this is happening now. This is not good. It is at some point going to take over some of gold's market share. Nobody really has a crystal ball, so it's impossible to say to what degree that will take shape and how quickly it will occur. And right now, we're not comparing in any way, apples with apples, in the sense that we're comparing an asset class that has a track record of over 4 millennia.
6,000 years versus 12
exactly.
years.
Yeah, exactly. Or however many thousand years versus just a handful of years. But it is happening, and traditional multi-asset portfolios are rebalancing. I just read something the other day, I think it was in Bloomberg, where even a small rebalancing of 1%. So, for example, if you created a multi-asset portfolio in July of 2010, for example, consisting of 49.5% equities, 49.5% bonds, and 1% Bitcoin, you would have realized an average annualized return of 104% in today's terms. Wow. So basically, that the translation there is just a tiny allocation of Bitcoin yields a huge amount and can already do basically has a disproportionate impact over the performance of a portfolio. And 10 years is not even necessarily a long-term view on this.
Not at all. Yeah.
So it's happening. It's happening.
Yeah. Okay. All right. So just changing our viewpoint for a second. Yeah. Let's talk about Bitcoin and regulation. So what? Yeah, I mean, this is a huge area, especially for your line of work as well. I mean, just in terms of to call out sort of recent what I've heard. So the chairman of the SEC, Jim Clayton, recently announced that Bitcoin would not be regulated as a security, but it would be regulated as a payment mechanism and store as value. So I don't know really what that means, but what do you see as the regulatory environment for Bitcoin at the moment? Because the world is trending towards digital. So what do you see as happening?
It's almost impossible to keep up with the regulation. I mean, it just is the volume of information, and we about this in the past in our previous conversations, that you could spend all day, every day, just on regulation alone, and you'd actually need a large team to cover all the bases.
Yeah.
And it just, but I think interestingly, it's just another classic case of the governments and the regulatory authorities just playing catch up, because they're always behind the curve when it comes to technological innovation. But the difference in the past with tech innovation, I think, versus what's happening now, is that Bitcoin and cryptocurrencies and indeed blockchain, it's not just about the technology. It's about the fact that it's like this curious mix of a novel, mix of technologies that Bitcoin is. It's a very interesting ingredients that's kind of produced a novel product. On top of that, it also represents, something almost an existential threat to governments and to regulatory bodies, because they ultimately need to be in control of the monetary supply. So all this the constant flip-flopping and vacillating over what to do over regulation, I think really is indicative of the fact that they realize that, yes, okay, we've slept on this actually, and the genie's out of the bottle, and we're really not sure what to make of this thing. Is it a commodity? Is it gold? Is it a currency? Is it a security? It's quite difficult for people to really wrap their heads around this. And obviously the ICO frenzy of a few years back did a lot to sort of confound things even further, because people link that to the sort of the Wall Street IPO pump and dump schemes and everything else.
100%. Yeah.
So I think people really saw it as a security, but of course we now know it's not a security. It's not really any of those things. It doesn't fit neatly into any of those categories. But of course, the regulatory bodies can only try and do that. They have to try and pigeonhole it in a sense, because to erect a whole new series of regulations around this one thing, which is still unproven in their case, is not a path that they want to go down, I think, at this stage. But to answer your question directly, I mean that I read that also, that I think it's the Senate, I think 2 bills have been released. I've got some notes here. Was it the Securities Clarity Act or something like that?
Right.
And so they're basically saying that, yes, okay, it's not a security. So what we're going to do now is we're going to regulate Bitcoin. The SEC will basically drop it, and it's going to go over to the commodities regulation guys, which is the CFTC. And I think so. The goal for them there is just to bring about more oversight. They say, of trading venues and Bitcoin, Ether, commodities, and everything else, so they can get like more oversight and track what's going on in the space. But really, what it also represents is that they're trying to, bring about a certain degree of regulatory harmonization over all these disparate things that they can't seem to quite grasp.
Nailed down.
So it nailed down exactly. So it is also an expression of an attempt to be able to do that. And we've seen, the last few months have been replete with examples of things that, they've had to sort of step in at the last minute and do, take drastic and draconian action, almost to make an example of certain exchanges, because again, it just shows that they're very much behind the curve. But the rate of the space is really key. I mean, it is evolving at a incredible rate. And I think that it's like a 5-headed monster. Once you cut one head off, you still got 4, but then the other one might grow back, and it might grow some more still.
Yeah, it is crazy.
So very interesting.
Yeah. So go.
I'd love to know. Yeah, I think we spoke. Can you hear me?
No, sorry, I just lost you for a
Hello?
second. No, go ahead. Can you hear me?
Yes, I wanted to actually ask you a question about what you thought of the Arthur Hayes and BitMEX fiasco of like a month ago now. Because I thought that was a good example of an exchange maybe gone awry, and the regulatory authority stepping in to try and take to exercise some authority and to reestablish control over something they've clearly already lost control of.
Yeah, I'll be honest. I don't know the facts. I mean, I know high level what's going on in a case, and so my understanding is BitMEX set up in another jurisdiction to obviously circumvent the SEC and sort of reach of all the regulatory bodies within the US. So my understanding, they're all above board, and so it seems to me they're looking for a scapegoat. I think BitMEX has been doing quite well from a derivatives perspective, and I just think it's really a bit of bullying from the regulatory bodies. But to be quite honest, I don't know the details of the case in terms of what BitMEX has been doing, what's legal, what's not legal. But it does seem like there's a number of organizations doing exactly what BitMEX has been doing. I think Ripple, they're trying to leave the US at the moment as well. They've apparently leaving their office in New York and looking for somewhere to set up either in the UK or Singapore. So there's no clarity. There's no clarity. Yeah. So as long as there's no clarity, then there is obviously loopholes and there's a lot of grey areas, and then regulatory bodies can catch or hold to account whoever they like. So yeah,
pretty much. No, I think that's it. I do think that there's I mean, you said before that there's no clarity, and it's difficult to know. I think the pace of evolution is such that it's difficult for anyone to know. I think even those in the space, it's itself exactly what the rules are. What really interests me, the reason I asked about BitMEX is that what really interested me is that as far as I understand, and again, I don't know the exact extent or nature of the AML and KYC violations that they committed. But what it really interests me about that case, they never actually took possession of US dollars on the exchange.
That's my
understanding. In other words, exactly. So in other words, they actually created an algorithmic or synthetic US dollar, and so you would basically deposit Bitcoin and withdraw Bitcoin without a single fiat dollar ever being touched or deposited or whatever else.
Okay, they don't like clever people like that, do they?
Well, exactly. And what's interesting about that is that, and this goes back to the question that you asked previously about money and what really is money and gold, etc. Is that, as far as I'm aware, this is like the first time that the federal government in the US has gone after an exchange, or even a crypto derivatives exchange in this case, that actually never has taken custody over the US dollar. So that, for me, that sets a very important precedent.
100%, big time.
In terms of the regulations of this market, and not only that, it's also in a way a tacit admission on the part of the U.S. regulatory authorities that Bitcoin is a form of money, because otherwise, what are they railing against here exactly? So I think it's a very interesting, case study.
I agree. It's totally interesting, and I guess for regulatory bodies and society as a whole, we are treading waters that we haven't trodden before. Bitcoin is, as I think I've said this metaphor to you before, is like a duck-billed platypus, which is one of these freak creatures which has features from other animals. It's got a bill of a duck, it's got the skin of the otter, it's got the web feet of, I don't know, some other animal. So like Bitcoin is, in some respects, is a security, in some respects is a property, some respects is, it's so many different things. And so obviously the regulatory bodies just don't know how to deal with it. But in saying that, in the last 6 months, what we have seen organizations such as Michael Saylor's MicroStrategy purchase $500 million worth of Bitcoin, and that's not even including his own personal stature of 100 million worth of Bitcoin, which is apparently gone up to $1 billion now, given the price movement. But we're also seeing Jack Dorsey's Square, Fidelity, Kraken, I think, is being given sort of a chartered license to open a bank. So I see a lot of these, especially MicroStrategy's transaction is huge in terms of building the credibility and a protective moat around Bitcoin. The more sort of investment, the more sort of public companies that purchase it, I think it kind of fends off the regulators. What's your thoughts on that?
Yeah, basically, I completely agree. I mean, it is almost a case now of, I think the doom and gloom and the naysayers are, you know, gradually, falling on hard times and being
Yeah.
quiet
Mr.
because
Radini, where are you? Peter
this
Schiff.
exactly, yeah. I mean, I like to sort of single him out as an example, but at least he has had he's manned up and basically said, yeah, well, there might be something that I've missed. So
Yeah.
I think that's an important thing to be able to do. And at this stage, I think what choice do you really have?
Yeah.
Because it's a question of old world thinking in a new paradigm. I
Yeah.
think
Yeah.
that he and many others are guilty of. But I think you're completely correct. I mean, it is a case of, if you can't beat them, join them. And a lot of these companies, it's no longer just a bunch of people sitting in their bedroom, making transactions or whatever else. The big corporates are getting involved, and they're
Are they,
putting their
are
money.
they taking notice? Are they sitting up to big corporates from a McKay research perspective? Are you seeing that in
Well,
the data?
I think it's clear that looking at various sites like the Bitcoin treasuries, for example, they do a great job in compiling a lot of data about how much these companies hold. Is that they're basically putting their money where their mouth is.
Right.
Buying that volume of Bitcoin is significant. It really is. It speaks to the fact that I think we were discussing before that Bitcoin is fastly approaching its all-time highs. And though I know that you're not supposed to say these three words, or four words even. This time it's different.
Yeah.
Because there was always the famous last words of
Yeah, of
before a
course.
pre-market crash.
Yeah.
But
Don't mind it,
this time it is different this time because of the activity that is pouring into these markets. And I wrote about this in the first piece that I ever did on the actual institutional interest in the markets, like just over a year ago. And in those days, it was it was more or less towards the beginning of trying to get an ETF approved. It was I think the Winklevoss brothers and everything else. And obviously they failed. Not that they've given up, but since then there's been many investment houses that have tried, and there's been successive attempts that have all failed. But I think everybody who's following the space knows that it's a question of when, not if. And it will happen. And once the ETF gets approved, then that is almost like a gateway and will catalyze institutional investment into the marketplace. Because once you can start saying this is a certified and regulated financial product that is supposed to have underlying custody of the asset, i.e. Bitcoin, in the same way that, say, a lot of the like GLD or SLV has underlying or supposed to have, at least, underlying custody to the precious metal, then that is going to set off a wave of investment activities from investment houses, from hedge funds, from pension providers, just across the board. And we can see every day all the infrastructure and all the announcements are building up around this, almost leading up to this big announcement. So it's almost like a steady crescendo or a drum roll into that ETF announcement.
Yeah. No,
you mentioned a few good examples, like Kraken, for example, getting a banking license.
Yeah.
That's a huge development.
Big.
And there have been many others. So.
Yeah. So I mean, if you buy a share of a public company which has a significant amount of Bitcoin in its treasury, is that technically an ETF? Is that a makeshift ETF?
Well, I mean,
you got some exposure there, wouldn't you? Yeah.
Yes, exactly. Yeah. So you could say that might be a way that some people might be able to play that as a proxy.
Yeah.
I still think, though, that's going to be insignificant to people wanting to actually invest in
100%
in Bitcoin vehicles. But I think you raise a really important point there, and that is this issue around custody. Because going back to what we were saying about gold, there's a saying in the gold market that if you don't hold it, you don't own it. That if you say you buy a few shares of GLD or SLV, you're supposed to have you're supposed to have legal title to the underlying asset.
Yeah.
Well, that's what you think that you have, but in fact, you don't necessarily, because it's just it's unallocated, put it that way. So it just all goes into a pot, and it's divided up by by the shares. So the total holdings of metal are divided by the number of shares that they have that they issue against those holdings. So it's a little bit like your bank branch. If everybody turned up and tried to withdraw all their money at the same time, of course we all know what would happen.
Yeah.
They'd be good for about 10% of it, whatever the fractional reserve or the capital requirements are, and beyond that, the doors would close, and that would be it. Of course, the whole system is built in such a way that they depend and rely on the fact that that won't happen. And so that is the same thing with in a way with commodity ETFs. That if everybody tried to redeem and take delivery on their gold at the same time, everybody's rushing to the exits at the same time. Of course, the exit stays the same size, so not everybody's going to be able to get out.
I like that one.
And it's the same thing with. I think people are clocking onto that fact now with Bitcoin, that there's been a number of announcements made over the past few weeks. I mean, the biggest one, I think you'd agree, is probably PayPal.
Oh, we forgot about that one. Yeah, cool. So that's a huge one to call out.
I think that a lot of people were really happy about that, and I think that people were getting excited about it, saying, "Oh, it's going to make internet money even easier," and now I can have my PayPal account, and I can actually send and take ownership of Bitcoin. But I think those people who know a little bit how these systems work, and actually how these custodial relationships work, know full well that it's not all that it's made out to be. And from my perspective, for many years I followed these the debates in the gold market about what actually constitutes a gold investment. Like, how can you ensure that you're able to benefit from for holding the asset in the first place, and all the properties that it offers, like we discussed before, inflation hedge, systemic risk. Well, it turns out that there are actually not that many options. It's either you hold it yourself in your hand and store it somewhere in your sock drawer or in a vault, or you have to go through a series of do a bit of research about secure gold vaulting solutions that offer actually allocated accounts where you actually have legal title to the gold. But even then, it's still not in your hands. There's still maybe an element of systemic risk where you might be redeemable in currency, not in gold. And I think people will start to realize that with Bitcoin, it's the same thing. If it's not your keys, then it's not your Bitcoin. So with PayPal, look and feel like you have Bitcoin, like with Revolut and other companies like that. The reality is, if you don't have your private keys, then it's not actually yours.
Not your Bitcoin.
And there are any number of counterparty failures that could happen in between.
Yes,
that could result in the loss of your asset. So I think that's probably important to bear in mind, and that goes back again. That's another commonality in a way between Bitcoin and gold, for example.
So just quickly jumping back to sort of the conversation around sort of wealth management, how is McKay Research working with wealth managers to kind of navigate their way through all of the murk and the mire of this space?
That's a good question. I mean, right now what I'm doing is I'm from our conversation today. I mean, it's clear that this market is so fast-paced, multifaceted, multidimensional. Any word that you want to, adjective you want to throw at it, it's that.
Superlatives. Yeah,
exactly, and superlatives as well. And the issue that a lot of smaller wealth managers, RIAs and IFAs have, is that they're just not able to keep pace with the shifting kaleidoscope of factors that are driving the evolution of the marketplace. And it's gotten to the point where you could say in 2016, 2017, and even perhaps up to 2018, it could be looked upon as acceptable to bury your head in the sand and hope that the problem would go away. Somehow all the master nodes would crash and the whole thing would just like evaporate into thin air. But I think it's become clear now to these people that, no, that's not going to happen.
Not going
A, and
away.
B, exactly. And B, I have a fiduciary responsibility to understand the market and to be able to basically advise the clients on its merits as an investment. And, so that obviously they're not unduly exposed to, potential risk factors that could come from investing it in the first place. So where I'm stepping into to help is by providing basically a cross section of analyses, very much 360 degrees at every level of analysis, macro, meso, and micro as well. So what is the individual doing in terms of storing Bitcoin? Where is Bitcoin being deployed exactly for what purpose? What on the meso level, of course, you've got the level of organization and company. What are the organizations doing? How do they shift? How are they shifting to respond to the markets, both in terms of setting up new ventures, exchanges, companies that are involved in Bitcoin custody or trading activity or whatever else. And then obviously on the macro level, you've got the the institutional investors and then the governments and the regulatory authorities who are again dealing with these constantly shifting factors. So it's a lot to keep abreast of, and I'm helping companies do that basically in a succinct way, in a bias-free way, in a way that saves them an enormous amount of time and effort, because I've been in the markets, I've got context from other markets as well, so I can speak their language. It's sort of independent in the sense that I don't have any commercial relationships with any exchanges or any financial products that tout Bitcoin in any way. And I think that last point cannot be understressed, given that we all know that this is a sector and an industry that is just so full of people who have something to sell you. And have vested interest in everything else. So independence, I think, is key, and I know that that's something that's valued by my clients. So
let's just jump back to blockchain, because obviously that is the title, is blockchain hype. So I just want to talk about blockchain in terms of real world applications. Now, 2016, 2017, blockchain was everywhere. It was, everybody was a blockchain salesman in terms of what blockchain could do in terms of world solutions. Have we moved on from where we were in 2016, 2017? What are the real solutions that we're starting to see come out which are underpinned by blockchain? Or are we in fact seeing anything? So I just want to really kind of go back to blockchain. What are we seeing in terms of blockchain solutions? Is there a killer app on blockchain yet?
Well, that's a really good question. Obviously it's slightly different, and going back to my my early answers in this interview, I think that for sure it really helps to think of it in that way, that what are the actual blockchain applications that are proving their worth in the business world and the manufacturing and industry and whatever else. I think probably to preface any conversation on that, I always go back to that. I think it's Roy Amara who said that innovative technologies, they always tend to be overestimated in the short term, but underestimated in the long term.
Okay.
And I really think that's true again in the case of blockchain. And in my personal opinion, I think that the fact that all the hype has sort of dissipated and died down over the last year and a half is definitely a positive thing.
Right, I agreed.
Because it's basically, as you say, it was a lot of people trying to sell you a story. Everything was blockchain. We're basically reinventing the wheel in name your industry by using a blockchain solution, whatever else. But now I think it's become increasingly clear that the failure rate has been extraordinarily high for startups. I think I read in a study that Deloitte did maybe a year and a half or 2 years ago. They came out with a figure that of all the blockchain startups that have gone online for in the last 3 years. I think there was a failure rate of around 90%.
And what was sounded out as the major drivers behind the failures?
Around the failures, I think really trying to come up with two things: technological solutions in search of a problem. That's become a bit of a cliche of sorts, but I think in the case of blockchain, it's absolutely true that the amount of VC activity in the space has sort of skyrocketed at around 2017, 2018.
Yeah, huge.
A lot of people were cashing in on that, and it's a little, I liken it a little bit to artificial intelligence. I heard a really interesting interview by an AI expert recently where they basically said, well, all the stuff that you hear about artificial intelligence, yes, it exists as a technology, but all those people saying they use it, they don't really actually use it. It's the furthest thing from AI. They have like a few things on machine learning that they basically scale up and overhype and sell this promise to a prospective buyer of coming up with a new innovation or solution that's basically built around AI, which is far from the case.
Yeah,
I think what we had in the blockchain space again was very, very similar to that. That a lot of these companies, if you actually looked under the bonnet, so to speak, there wasn't actually a lot there that was an integrated blockchain solution that solved an actual problem. It was instead using some form of a database, or that you were cryptographically hashing from a database and calling that blockchain. There were all sorts of shenanigans that uncovered that people were
Excel
using.
spreadsheets. Did it?
Yes, to attract the interest of
investors.
VCs.
Yeah.
And I think now what we're seeing is that the real world use cases are being explored like in a lot more depth. They're going beyond proof of concept and actually trying to come round to production grade solutions across quite a few different industries. So that is, I think that's promising. A lot of people say that is it's evidence that blockchain was all hype to begin with, and there's no value to it. I disagree. I take the view that it was necessary for that to happen, but the market did what the market should do, which is flush out the excess, the viable companies that weren't viable are now doing something else. So
yeah,
no, I think that's sort of the setup. I think you also asked me about what am I personally interested in, or like what have I been tracking in terms of blockchain?
Yeah, in terms of projects, whether it's agriculture, supply chain, insurance, even 3D printing. What's happening in the space?
Yeah, there's a lot going on. There's a few that I like. One of them is to do more with the social impact, and we were talking before about the Bitcoin is a social good. Well, of course, the same can be said of some of the blockchain projects as well. So there's one that I like called AgriLedger, which is basically a framework of integrated services that the idea is to even out the playing field for farmers and cooperatives.
Okay.
And so obviously, as a significant amount of the food that ends up on our tables over here in the West and elsewhere, comes from much poorer countries.
Sure.
And often picked by women as well. Often in very difficult and precarious circumstances. So I think the idea behind it is that you got to work towards the buying and selling and sharing of things to level out the playing field using a blockchain solution. So you've got basically cryptographic data that's produced via this this application of smart contracts. And so, for example, I read recently they launched a blockchain ecosystem in the Caribbean. That was specifically designed around Haitian farmers.
Oh wow!
And so what they did was just basically trying to add transparency to the supply chain, the agri supply chain, to create like a fairer pricing mechanism for the suppliers and the retailers in the region. And so what it does is that the platform assigns all the farmers who are enrolled in the system, they get assigned with a digital ID number. And so they basically gives them access to the supply chain and access to the financial services, logistics, the insurance, and other services as well. And through that, through that system, the farmers can tokenize their products, and so have access to peer-to-peer dealing as well. So there you have a situation where the platform uses blockchain to lower friction, so to speak, in the overall supply chain, to what I say is to revitalize the value chain, because often people use the term supply chain and value chain interchangeably, but they're not in this case, because if you make the supply chain more efficient, of course, then you can, as I say, you can revitalize the value chain and redistribute the value chain in ways that are fair, more equitable. And also, making it possible to link up producers of the agri products themselves to the actual end user in ways that weren't possible before. So I mean that has real potential. That is something that has legs. That is something that has real world potential, and that also is something that I think we can all look at as an example of, once again, technology can be used. It is a blunt instrument. It can be used for bad. It can be used for selfish purposes, but it can also be used for expanding cooperatives, for doing, and to level the playing field in ways that weren't necessarily possible before. So that's one example of agribusiness. One area that I've been looking at closely as part of my deep dive into the fourth industrial revolution, Industry 4.0 space, has been 3D printing. There's been a lot going on in that space as well. Although I wouldn't say that anything has got, is yet at the level of being production grade. There's been many of projects that have been very interesting indeed. And in context, I mean, the 3D printing space is obviously, it's a highly disruptive technology. And like the union of being able to 3D print something in blockchain is becoming increasingly important from a financial and economic standpoint from the original equipment manufacturers, simply because of the decline of the traditional print industry with the move to digital. So a lot of the the big OEMs like HP, for example, or Xerox, they found themselves in a situation where they've had to pivot slightly, and they've actually deployed significant resources into blockchain R&D to move into that area and into 3D printing. So just to give you an example, one thing that I read recently in the aviation industry, a company called Moog. I mean, they're in the business of manufacturing spare parts and components for aircraft. And so their proposition is to combine blockchain and 3D printing rather in a way that hasn't been done before, with the goal of speeding up basically the production and the approval of replacement parts. And the reason why that's of significance is because it's one of those markets that's heavily regulated, and the sales of aircraft components, they require certification from the FAA, which I think is the Federal Aviation Administration, as well as a host of other agencies, and it's very time consuming. There's a lot of red tape involved. And so here the idea is the ability of blockchain to authenticate the transactions and streamline the processes across large networks involving the different partners in the ecosystem can really massively speed up the process. So that was one company that I looked in a little bit more details to what they were doing, and it looked like it was a very interesting application and use case.
So are we
But of
seeing?
course, obviously now COVID has hit. I'm not really sure to what degree that's going to be, as in demand as it was before.
Bit of a spanner in the works, isn't it? COVID.
Exactly. So,
Are we seeing governments really adopt this technology? I mean, apart from sort of the Chinese government releasing a digital blockchain-based currency, are we seeing any other sort of examples of governments utilizing it, whether it's for voting or for anything else?
there's definitely evidence that governments are moving into it. I mean, I think
Yeah.
that a lot of people have asked themselves, well, why are we seeing governments so so slow and so late to
Yeah.
embrace the technology? And I think obviously there's definitely a parallel there between what we've seen in the cryptocurrency space. Their failure to get on top of the regulation, I think, is closely correlated with their lack of ambition and drive to leverage blockchain technology for their own purposes. So yeah, they've always been slow to embrace new tech, and that's for basically because governments are always slower to do it because of the innovation risk associated with developing unproven technologies, and they tend to be massively bureaucratic as well, which slows everything down.
Yeah.
And that's not even to mention the fact that they're a lot of them are self-preservationists, and they tend to focus on elections. So a long-term technological infrastructural development sometimes just isn't of interest. But I mean, it's definitely changing. I mean, I actually dug up some stats for you on this.
Oh, fantastic.
And I've got my notes here. In the US, for example, this is data from the IDC, and they've estimated that for the US federal government, the blockchain initiatives are on track to exceed $123.5 million by 2022.
Oh, wow.
Okay. So this data is a little bit old now. It's at least a year old. So I think the goalposts may have moved on this, but it's probably in the ballpark. That represents a 1,000% increase over 2017, where it was 10.7 billion, for example. And similarly, blockchain spending in state and local governments in the US was anticipated to grow from 4.4 million in 2017 to 48.2 million in 2022. So again, that's a huge increase, and it's happening there, and it's happening in governments that also tend to be more up to speed in embracing new technology. Like you've heard what's going on in Switzerland, for example, or Estonia is another good example.
Yeah.
In Switzerland, I mean, that's a country I grew up there for many years, so that's close to my heart.
Okay.
And they've made large strides in blockchain R&D at implementing the solutions at a state level. So, for example, Geneva, they've invested quite heavily in blockchain systems, and they are almost sort of the leaders in blockchain in Switzerland.
Oh, wow. Did not know that.
The middle of the country that in Zug is known as the crypto capital. I think it's called Crypto Valley.
Yeah, there's a crypto town. I can't remember what it's called in Switzerland.
Yeah, that is probably Zug. That is probably Zug.
Yeah.
And Geneva tends to be a little bit more involved in sort of the government adoption of blockchain systems. So one example that I remember from them is that they've looked at they've kind of had like a 2 or 3 pronged approach to get better operational efficiency through blockchain. And so it's business integration business registration. I remember as one point.
Yeah.
They're also looking at it from a digital identity point of view, and also from an official document ID point of view as well. So they've teamed up with different groups in the area. So, for example, Geneva's commercial registry teamed up with the Genève Lab, which is like an IT R&D outfit in the region, along with other public services bodies to develop this. And so they've looked at using Ethereum mainly, and the idea is that again, like in many use cases, the platform should allow or does allow for for less friction in the flow of transaction data, and they're looking at cutting out like a lot of labor and time intensive bureaucratic processes like things like that involve public notaries, tax registration, bank loans, etc.
Right. Okay.
So it is happening. Obviously, it tends to fly under the radar a lot more than in the crypto space, which is not hard, because it's obviously a pretty high bar, because that's breakneck tempo. But it's coming as well. And at one point, I think for governments, the idea is that it will get to a point where in a few years, when these systems go online and are mass produced, that you won't even be aware that you're using a blockchain solution.
Yeah,
It's just
exactly.
going to be,
Yeah, totally.
yeah.
That's
Digital
when
identity.
it hits mass adoption once the normal man in the street doesn't even know they're using a blockchain based solution, right? Definitely.
It's definitely going to get to that point. I mean, we're a long way off, but I think that's the way that we're headed. I think if this thing didn't have legs, I think it would have just fallen by the wayside already. But the fact that the momentum continues to build, both in the crypto space and in the blockchain application space, and the fact that on the implementation level, there's a lot of progress that's being made in terms of the applications that are possible to be built on top of Ethereum, say for example.
Yeah.
You've probably heard all about the Ethereum 2 and how that's going to change the way that you can create microeconomies through staking. I mean, all of that there's a lot to be excited about in the space.
Yeah.
And particularly now where there's a lot less hype around, and you actually have people who are, you've got a lot more straight talkers around, and they can actually walk you through the steps as to why something actually has value in the first place.
So it sounds like the sort of Dong Tapscott Kool-Aid that everybody was drinking in 2016, 2017 is wearing off, and hopium is going away. And now we're starting to see real, tangible examples. What do we see as the major challenges or constraints with blockchain technology? And when I talk about that, I'm talking about sort of legal issues, whether it's GDPR. What are the major challenges ahead?
I sort of agree with your point about sort of the internet of value. Yes, it is indeed the internet of value, but I think increasingly people are doing a bit of research and getting the understanding as to why it is called that, and that there are merits to those positions. So I think we're definitely in a healthy space, but as you say, there are, like with any developing or fledgling technologies, there are headwinds. In the case of blockchain, the key issue that I think people look at is just a lack of interoperability. That is one that comes up again and again, and I know that there has been a lot of progress that's been made, but there's still a lot of work that has to be done to combat that, so that you have different blockchains that can all talk to each other, even though they have different algorithms, different protocols, etc. Progress needs to be made in that area, because if you want to deploy a solution, it's got to work with other solutions, and otherwise there's no way forward for those people to come together and build something that will actually be a long-lasting benefit. So definitely a lot of work to be done there, but there are a lot of big name service providers, your Oracles, your IBMs that are actively lobbying for more industry support for cross industry platforms for blockchain. So that's definitely a major one. One that in my opinion tends to be a little bit overlooked is just relative to other technologies. There's just a lack of decision-making data, simply because it hasn't been around for that long. 10 years ago, nobody was talking about blockchain for business. We just witnessed the birth of blockchain through Bitcoin just months prior. Fast forward to the present day, I mean, everybody's talking about it, but we don't really have a lot of data on which to base decisions. So the lack of data just basically presents challenges to be able to assess the ROI, and that basically increases the level of perceived risk and investment risk. And in a way, really closely linked to that is the fact that because of the hype train that Bitcoin and in a way blockchain has been on for the last few years, a significant number of executives still think that the technology is overhyped. And so we have a situation where for other innovative technologies like the Internet of Things, and even things like 3D printing that are run 24/7, you've got reams and reams of data on which to base investment decisions. That doesn't really exist for blockchain. So as time goes on, and as I think more information comes online and is sort of de-siloed and shared, I think we're going to see sort of an increase in investment activity, and a decrease in an increase in appetite for the technology, put it that way. And the final point on that maybe is to say that the one of the signposts of the concerns around the investment risk is the consortia, the rise of consortia around in different industries, in trade, in insurance, and many other industries, reflects the fact that that a lot of companies want to pool their resources and come together, sit down at the same table.
And mitigate risk as well. Right?
Exactly. They want to come together to mitigate risk. Obviously, there are pros and cons for consortia. The number one being that you kind of don't have as much control as to how these things are developed. But of course, it's huge because you get to come to the table, even though it's not clear how what the end game is in terms of business models and revenue streams. It's basically helping the industry evolve in the space, and getting the ecosystem of players within that industry to sort of drive the solutions. So I think that's a trend that's likely just to continue for some time. We may see it go the other way as businesses become more guarded about their own proprietary technologies or blockchains that they're running to gain a competitive edge. But that's definitely another trend to watch. And then finally, regulation and compliance. I mean, we could go on about that for days as well, but that's going to be key. I mean, that really in a way that holds the keys for a lot of blockchain business models, and for a lot of industries as well, particularly for those that have real life legal concerns around security. So for example, in the automotive industry, you've got to be very clear about what who's liable if something fails, because that has real world implications. So take link with another technology like 3D printing. If you 3D print a part and that part fails, well, who's ultimately responsible for that? And I think blockchain will have is going to play an increasing role there as well, in making sure that everybody is singing from the same hymn sheet with respect to regulating these technologies.
Just to close out kind of last section, I kind of want to get your views on how you see this all going in the future from a sort of blockchain, Bitcoin, crypto perspective. Where do you see this whole industry? You can even talk about Bitcoin, but where do you see all of this going in, let's say, the next sort of 5, 10, 20 years? What's your outlook for this space?
My outlook is positive. I do very much approach it as I don't really have skin in the game, or at least I try to look at it that way. And it's clear that it's still a young technology. There's still a lot of potential for growth in many areas. And as we spoke briefly about in the early part of our talk about where it's actually being used by people who are less fortunate than ourselves to be sort of having the luxury sitting around debating use cases. Obviously, it's being deployed in in real life situations where people are like basically less fortunate. So that being the case, I think it's both on the bottom end, that's a great example. On the top end, there's just no limit to the degree to institutional activity in the space right now, because all the signposts are pointing one way, and that is like a huge ramp up in investment. As I said before, the ETF will be a crucial milestone to watch.
Okay, I'll look out for that.
Already we're seeing, we're already seeing all the signposts with respect to the regulations with your Fidelities, your Krakens, the various pronouncements on CFTC regulations and everything else. So it really is pouring in, and the market cap is still negligibly small compared to compared to other industries. So I think I hate to say the only way is up, but I just think as more interest pours into the market, it is going to increase.
There's a bit of upside in there. Definitely.
There's definitely upside in there. It's still sort of just to hedge that position, and I would say that it's still going through a series of price discovery corrections. So the volatility is going to be there. The seesaw will continue, but as more money pours into the market, from the institutional end at top, and also from the retail side, it's basically going to start to even out. The same way that gold has evened out over the years. So that will start to stabilize for sure. So it's hugely exciting. It has a lot of potential as an asset class, as a currency, and everything else. So it's a great space to be involved in, basically. From a blockchain perspective, I would say, or from a more philosophical note to end on, I mean, what I'm looking for, again, is sort of the continued rebalancing of the relationship of the individual with the institution. Mm-hmm. So again, going back to this peer-to-peer trustless network of participants, I mean, that's where it really has, its power really lies to basically disrupt that relationship. And I think the reason why it's had so much success is because of the intersection of these different trends, we are seeing political, social, economic, financial trends intersect that are pointing to the individual to want to reclaim some of that control. And I think the more that happens, the more people can, transact value peer to peer, the less importance that's going to place on institutions to sort of do that and pool resources on our behalves. Mm-hmm. And we know that how inefficient that can be for states to do that, to pool resources. Like the pension system is a great example of that. I mean, if the system, we wouldn't be on the precipice of a pension crisis. So it has a lot of potential to disrupt that mechanism or that relationship. So I'm going to be very, very interested to watch the potential changes happening on that level. And then finally, really the whole microeconomies and the staking, how people are going to be creating new forms of value, basically potentially from at any given point at any given time, how it's completely democratized money and IP and value creation across a whole host of different spaces. So that is going to be it's going to be really insanely interesting to see how that space develops, because I think that is something that will, in a way, fly under the radar, I think, before people actually really start to see these dynamics play out in real time in front of them, where they can actually use a product, that microeconomy, or they can start to trade like tokens for reserve power that they have in their lithium battery storage capacity or whatever else. So there's
so many
different ways.
this is the technology.
Exactly. So eventually, what we will see is that they will start to coalesce around certain areas or certain forms of value. But I mean, nobody don't yet know exactly how that's going to pan out. But I think keeping an open mind, as I know that you do, I'll be, I'm looking to be surprised pretty much every day. So
Yeah, we just got to keep watching. This is moving so fast, and the goalpost moves every day. But yeah, we definitely
nothing would surprise me at this point.
yeah,
So
totally. But James, we've covered so much. We've really covered so much. I feel that I've learned so much. Where can anybody get hold of you, whether it's social media or McKay Research? Where can we find you?
well, the best thing is to, first of all, you can email me directly at james@mckayresearch.com, and that's McKay, DKAY, research.com. I will do my best to get back to anybody who contacts me directly. For more information about what we do, go to mckayresearch.com. And my Twitter handle is @McKayResearch, and you can find me on LinkedIn as well. If anybody's interested, for those in the tech space, I do have, this week we released a new report, and it's all about the degree to which, or how, the COVID-19 has impacted the industry 4.0. So we basically look at how COVID has raised several questions on tech transformation and how it will play out under the pandemic, and how it has so far. And so we look at things like mass unemployment, global supply chain shifts, government lockdowns, and how that will accelerate deployment of these connected digital technologies. So that is available on my website. So just head on over and you can download a free copy. And yeah.
Appreciate your time, and so yeah, thank you very much, and let's keep in touch. Definitely look to go out for a beer when everything gets fixed. Definitely. Take care, bro.
You take care, man.
So what did you think? Did we actually answer the question, is blockchain hype, do you think? No, of course we did. My takeaway is that blockchain, the hype has gone out of blockchain. I personally feel I'm not hearing about it as much, which is a good sign, because now companies and businesses which have invested in the research and invested in the innovation are actually working on building tangible solutions. If we look across industry, there's so many use cases for blockchain technology. Whether it's voting, obviously we saw what unfolded in the US elections, electric cars, driverless cars, agriculture, 3D printing. So many industries and governments are looking for blockchain-based solutions, and this is actually happening. So it's not just hype, it's real. Do we have a killer app? Not yet. It may take another 5-10 years to see that, but with the amount of investment and the amount of sort of governments investing in this space, I think this is something we'll surely see in the next few years. So I'd just like to give a shout out and a big thank you to James McKay and the people of McKay Research. James' insight was spot on. I learned so much. And I say that all the time, but I really actually did learn so much. James really gave a detailed 360 view of the industry. And I'm someone who studied blockchain strategy. I felt he opened my mind a lot more. And the way he kind of pulled in sort of government, he pulled in regulations, the challenges the industry's facing to mass adoptions, as well as how he pulled in Bitcoin from a financial management perspective, from a wealth management perspective, as well as the regulatory horizon, which Bitcoin is likely to drift into as it increases in value. And rest assured, everything James has provided, some of it is going to be his own opinions, but for the most of it, it's going to be researched, it's going to be backed by data, backed by information, backed by conversations, because that's the great work they do at McKay Research, providing a really independent view for their partners. Okay, so other takeaways, taken away so much from this. But for me, what I liked the most about this session was probably the discussion around Bitcoin versus gold. To me, this needs to be a standalone episode, and James doesn't know this already, but he's been earmarked for series 2 of the Genesis Block Education podcast, and we're definitely going to do a standout show on Bitcoin and gold. And listen, it's not Bitcoin. It's never Bitcoin versus gold. It's Bitcoin and gold. Two assets with very similar qualities. To wrap up, I'll just say blockchain back in 2017 promised so much. At this point in time, has it delivered? I think my answer is no. But this is not a closed book. This is something that's ongoing. It's a continual conversation, and it's a work in progress. But what we can say, with Bitcoin reaching its all-time high and in touching distance of going beyond its all-time high, I'm pretty sure interest of institutional organizations is at its all-time high. The co-opting of this whole space by industry is something we will see more and more. So if you're business and you're looking for sort of consultants to partner with to learn more about the blockchain space, please see the show notes for information on how you can get in contact with James McKay and McKay Research, as well as all of James's social media if you want to engage with him directly. This is the Genesis Block Education podcast, episode number 7. Please like, share, comment, download, support the thing, support us, and we're not gonna stop. So get on board. But guys, we appreciate you. I'm Bitcoin by Malks, signing out. Take care.